Welcome to the Childcare Genius Podcast, the world's leading authority on childcare marketing, mindset, expansion, and profitability. Each episode will feature interviews with the brightest minds in the childcare industry to guide you into becoming a smarter business leader. Our hosts have opened 10 schools while raising 5 children. They are certified business coaches and are the top-selling childcare business book authors of all time. This episode is sponsored by Childcare Genius Marketing. Let Childcare Genius Marketing help you get fully enrolled and fully staffed. Visit childcaregenius.com for more details. Let's welcome to the Childcare Genius Podcast our hosts, Brian and Carol Duprey.
Welcome to the Childcare Genius Podcast.
Hi, we're your hosts, Brian and Carol Duprey. So excited to be here with you today. We got another episode of Ask Brian and Carol, and we're doing this the entire month. We're taking questions from the audience. Our listeners, our followers are sending us questions. We're going to answer them live on the air. And if you have a question you would like us to read on the air, feel free to send it to us. Email me at brian@childcaregenius.com. Give us the question. And if you're lucky, we will answer it on the air for you. And if we can't answer it on the air, I'll at least reply to an email. We'll give you some tools to help you through the problem. But the question that came in today, it's how do I create an emergency fund specifically for business surprises? Rainy day fund.
Yeah,
It rains sometimes, doesn't it?
it does.
We've had a few rainy days over the years in our childcare business. And having a rainy day fund, emergency fund, is a great idea. So let's talk about the first aspect of getting that emergency fund. What is it?
Live below your means.
Yeah, living below your means, downsize your spending and lifestyle is very important. I did a podcast this month on exactly that, living below your means. So that's a Friday podcast. Have to check that out. I'm not sure which week that's airing, but it's going to be just on living below your means, which is a great one. But by doing so, it helps to free up some money. You can start putting more money away and have that rainy day fund when you need it. Very important. Don't spend 100% of what you make. You want to live on 70% or less of what you make. And if you could do that, you're going to be in great financial shape, ahead of your competitors, be able to survive any economic storm that comes. All right, the next one is to allocate a certain percentage of revenue to your rainy day fund and set up automatic transfers every single month. So by money coming in every month, if you set up an auto transfer, say you transfer $1,000 every month to your savings account or a money market account for some kind of rainy day fund, could even be stocks, something that where you can get it liquid if you need it pretty quickly. And it's out of sight, out of mind. Like, don't let it hit your bank account. Like, you want it to go automatically. When it comes into yours, it goes directly out. Don't let it sit in your account for a while because you'll bring it into your lifestyle. Just have automatic money coming out, like out of sight, out of mind. Your savings will grow quickly. I can remember doing this and I set up all these transfers. I had all these sub accounts and I had payroll tax money going in. I had vacation money going in. I had a whole bunch of different new expenses I had, maintenance, things like that. Having all these different accounts, when the expenses came, they were not surprises. So that's a very important thing to do. What's the next one, hon?
Pay down higher interest debt because
Save money.
Yes.
You want to pay off high interest debt. It's very important to not pay a lot of interest. It's a waste of money. All right, anything above 6% interest should be paid off early, if you can. And if you have anything over 10, you got to get aggressive paying that thing off because it's really going to hit you on the interest side. But paying off higher interest debt is a way to have an emergency fund. And also, let's just say your home equity in your house. That's the next thing, is your home equity line of credit in your home or business. Very important to have a home equity line of credit called the HELOC on your home or your business. By doing so, that is your emergency fund. If you had $250,000, say, of equity in your house, You get that in a HELOC, it's home equity line of credit. It's revolving. You don't actually have the money. You can draw from it if you
Yeah.
need to. You only pay interest on what you take out. But that becomes your emergency fund while you're building your emergency fund.
We did that in the beginning.
We did that for sure. We've tapped into that a few times during
Mhm.
economic downturns to pay off stuff. We quickly paid it back off, and then it becomes revolving again.
Yeah.
So as you're building your business, try to save into a rainy day fund, but have this as your backup, and also have this while you're building your rainy day fund. So you know that, if something bad were to happen, you'd have a couple months worth of payrolls at least covered. If the
Mhm.
government went shut down, you can get subsidy payments for months. If there was a terrorist attack, an economic downturn, all these things could happen. It has happened. So things
Mhm.
where you could lose 30% of your kids, 40% of your kids. You need to have revenue to get through those storms, and be able to pay all your bills and not get in
And
financial trouble.
sometimes you have unexpected money come in, whether it be grant money or, you picked up a couple kids on subsidy or something. Put that money away. Don't just automatically put it into buying something extra for your center.
I see all these owners all the time. They get this money and they go out and buy $100,000 playground equipment. You don't need $100,000 playground equipment.
Mhm.
The average center, you could buy used equipment and get it a whole lot better and cheaper. There's always centers going out of business. You get stuff at a fraction of the cost. So, be smart with your dollars. Protect yourself first. After you have, 6 months to a year worth of money in savings, and you can go out and buy the $100,000 playground.
Right.
But until you got your rainy day fund shored up between 6 and 12 months of total expenses, including payroll and everything in your profit, stuff for you to live on, don't go out and spend foolishly.
Right.
And the last thing is to practice delayed gratification. You can't be driving around a $100,000 car when you have no emergency fund.
Yeah.
That is dumb. Really, just plain and simple, dumb, because you're not. How hard is it going to be sell that $100,000 car in that kind of economic downturn? First of all, second, it's only worth $50,000 when you go sell it. So you've already lost $50,000 off the lot, and you need to practice your delayed gratification. I did a session on that this month about living below your means. I talked a
Mhm.
little bit about that, so I'd definitely listen to that episode. It's a Friday podcast this month. We practiced delayed gratification for a long time. And we still live well below our means. And there's no embarrassment in that. You don't have to keep up with the Joneses because the Joneses don't care about you at all.
I mean, speaking of like owning an expensive car, if you have a car and you pay it off, keep putting that money away.
Yes,
And
good point.
the same thing with something for your business. If you have a loan or something in your business that you have paid off, keep putting that same amount of money away.
By doing so, that helps to build that rainy day fund.
Yeah.
And I always say, if you pay off a car, you save $500 a month, put that money away. And when you have enough for a new car, then you've used that money.
Right.
Like always pay cash. We haven't borrowed for a car in 15, 20 years or so. And it's just good practice to be able to do that. Anyway, we just wanted to give you some tips. So thank you for that email from that listener. And we appreciate you asking us about emergency funds, specifically for business surprises. If we could help you in your childcare business and you're struggling, whether it be in finance, marketing, enrollment, operations, systems, payroll, staffing, you name it, there is a myriad of different things you could be struggling in. Could be just working with your spouse. That could be a challenge in itself. Thankfully, we got that figured out. But anyway, we can help. Go to our website, childcaregenius.com. Go to the coaching tab. It sounds like a free coaching call. And somebody on my team will get to you and help you solve this situation and get you in a much better shape. So it would be our pleasure because we want to help you. So I just want to say thank you for taking time out of your busy life to listen to us. We really appreciate it.
Don't forget to hit the subscribe button so you won't miss a future episode of the Child Care Genius podcast. And we'll see you next week.
Bye-bye.
Bye.
Thank you for listening to the Childcare Genius podcast. If you enjoyed the show, please do us a favor and hit the subscribe button so you don't miss a future episode. Don't forget to visit our website at childcaregenius.com to see a list of services we offer to help grow your childcare business. Until next time, thank you for being a part of the Childcare Genius community.